Welcome to the June 1st, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Asset Management, and we've been here each week through the crisis and making sure that each client is well served. The lessons I build into this fast-paced tour of the global financial markets lead to some of the choices that we're making and why, including the mathematics. First math, 29.5 to 18.2 on the Dow is a 38% correction nearly instantaneously this year. The month of March, that's March 23rd. Since that time, we moved closer to 26,000. New York Stock Exchange reopened the floor this week, and apparently some buyers showed up. Has the Dow gone too far too fast? Maybe so. And I want to cover some strategies over the last 34 years that have helped us to get to record profits along with record forward income. Here we go first. The bad news. GDP this quarter projected to be a minus 34%, including the April shutdown. Next quarter, a whopping 15% recovery, then 8%, then 5%. This goes out to the third quarter of 2021, and it shows a fairly robust recovery, but the shape is actually the decline we saw and then a longer trajectory for the Dow to get back to a 29,500. Well, we don't want to lose the value of time while we wait. We want to get paid, we want to compound. How do we speed the process getting to a healthy rate of return from the January levels? And I'm going to cover it here. This says it could take quite a while because 2020, the GDP forecast is a minus 6%. Then I go to 2021. This is a 4%. Now we have 3% in 2022. What that says is it's the end of 22 before you see record economic activity and a restoration of the jobs lost. So 2023 is the first opportunity for the indexes just to get back to where they were. What could work better than that? So I want to cover some of the categories that I believe can help us to accomplish that. This is the healthcare index, just the short-term version and the recovery. The healthcare companies, especially those with dividends, appear to be permanent long-term beneficiaries of preparedness. And that includes the antiviral, it includes devices, it includes the entire service industry, because there will be a higher level forward preparedness for those industries. The other, high yield, this being one of the larger positions that we've used to recover in the past because it's more of a mathematically reliable model while you get paid. Par value is about 100. We were back at 89. Here's the crisis, a low of 68, and a recovery to about 82% of par value. What does that mean? Bonds and loans come due at par, 100% of maturity value. They're trading at 82 cents on the dollar for the short-term high yield index, and there's even better discounts out there, which we'll get to. Here, back in the crisis, high yield was over par, went to 62% of par, recovered to 95. Great opportunity. This recovery with compounded interest reached record profits long before the Dow, which took all the way to 2012. Let me show you how. Here we've got the global high yield, not without price risk. As a matter of fact, there were times that the price risk was like equity or sometimes even worse. But what doesn't change? Loans and bonds come due at par, less defaults. And if you have a basket, global high yield basket, you could reinvest those cash payments or use it to pay the bills. But if you reinvested, it was a 5-year, 122% return, 14% compounded, while the Dow just went down and came back up over that same 5-year period. Domestic high yield was a 10% during the time, 10% average, 77% total for the domestic high yield. That was the difference. You got paid to wait, and the long-term detriment to value wasn't permanent. It actually gave you an advantage of compounding. So here we've got crude oil year to date. Wow, minus 38 a barrel, minus 37 a barrel. Never happened before in history, wasn't in any of the projections. We told the story of Bank of China participating in this big sell-off. Yes, the Chinese were responsible for a big part of that. Oil now at about 33. That's about a $70 1 month performance of oil. It won't probably ever go up $70 a barrel in a single month. But it does underscore one of the areas that has great yield and great long-term value. That is the pipeline index. This is oil, and the yellow that you see is oil, 145 at the peak. Here is a low of about $30 a barrel, and here is a low of minus 37. It says, yes, it's cheap. The energy infrastructure, the more reliable pipelines, and they pay income. Here's the graph. It moves in sympathy, but what is the real long-term value? And does it always follow oil? In this case, the futures market for oil is something I wanted to key on. If you go to the end of 2022, oil tops $40 a barrel, actually sooner than that, July of 22. Next year, what these tell you is that you're seeing oil recover to near 40. That's a level of more equilibrium. If you think longer term and you get paid to wait, the infrastructure could be one of the best inflation hedges and appreciation potentials from here. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman. Join us each week for an update as we navigate through the crisis of 2020. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.